What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in today's weekend update, we're going to look at a macro level view of the stock market. We're going to take a look at the weekly and monthly charts for the Nasdaq 100, the S&P 500, the Dow Jones, the Russell 2000, and then we'll also look at Bitcoin. So first up, let's take a look at the Nasdaq 100 NDX index. So let's crack open this chart and see what's going on in the stock market today. All right, first let's take a look at the bear bull survey, and we can see that we're about 49% bullish on the survey. This is usually a contrarian indication, so you normally want to take a more defensive stance when everybody else is bullish. Remember that Warren Buffett says buy when everybody is fearful and sell when everybody is greedy. We're definitely getting closer to the greed on this scale. We're seeing a lot of people that are bullish and not so many people anymore that are still bearish. We're only about 23.6% bearish, but we do have about 27.5% people that are still neutral. So this doesn't mean the market can't go higher, but it generally means that you want to get more defensive the more people that we see becoming bullish. So remember, back before the tech sector in the end of February, we did have about 46% bullish, and that did trigger a correction around the same time. This doesn't mean that this indication triggers corrections, but it just goes to show that it's a contrarian indication, and when more people are bullish, the stock market is usually likely to go lower. So just pay attention, because there is a lot of greed right now, and it's something that you want to be aware of if you're putting your hard-earned money in the stock market. All right, so jumping back to the NDX, which is the Nasdaq 100 index, this is a weekly chart, so every single candlestick will represent one entire week's worth of price action. We could see last week that we did close lower, and we're still holding up above that positively sloping 20 simple moving average. The 5 EMA is definitely negatively sloping, and it is getting very close to crossing back below the 13 EMA. Remember, we define a bullish trend if all of the moving averages are stacked to the bull side, meaning the 5 is over the 13 and the 13 is over the 20. We still do have a bull trend on the Nasdaq 100, but we're failing to break above this $13,300 level. So that is the strong resistance that is suppressing the price action. And if we do get a price action close on a weekly candle below the 20 simple moving average, this will start to look like a bear market. So right now, we still want to say it's a bull market, because all the moving averages are still stacked to the bull side. So the trend is still bullish, and the trend is our friend. So we want to stick on the side of the trend. That doesn't mean we won't get volatility and selling on daily charts, but on the weekly chart, if you're looking at a more macro level view, it does still look like the stock market is trending higher on the Nasdaq 100. Now, if we can break over that $13,300 level, that will be a higher high on a daily chart, which will start signaling that we could start seeing new all-time highs. Now, I want you to remember that my price target for the year 2021 for the NDX is up here at 14,488. So from this week's close to that price target, it does mean we could have about 13% upside before we hit the price target for the year 2021 that I have for the NDX. Now, there's no guarantees we have to hit that price target, but as long as we're in a bull trend and we're holding up above the 20 simple moving average, that's the macro level target that I want to pay attention to. Now, if we break down below the 20 simple, it's very possible we're going to retest support at the 50 EMA on this weekly chart. So from last week's close to that level, that's about a 10% drop. So as you can tell, we're right in the middle between our price target and our downside support, because we have about 13% upside and about 10% downside. So this next week of price action is going to be very critical to see if the bulls are going to take over and we're going to start heading back higher, or if the bears are going to take over and start driving prices to lower lows. So there's not too much else to talk about on the weekly chart for the Nasdaq 100, other than the fact that we're at a pivot and we need to decide if the bears or bulls are going to win going into next week. So that $13,300 level is very critical, and the downside support level, which is the 20 simple moving average, is right around 12,800. So those are your critical support and resistance levels. In either direction, if the price action breaks above resistance, we're going to know to go bullish, and if we break down below support, we're going to know to go bearish. So let's switch over to a monthly chart of the NDX, and we can see on the monthly chart, we're still holding up above a positive sloping 5 EMA, and all of these moving averages are still stacked to the bull side. Now, one thing to note is from this month's close, which is not yet over, down to the 50 EMA is about a 33% drop. So we are getting a little extended over the 50 EMA on a monthly chart, but that doesn't always mean that we have to go lower. If we start trading sideways, this 50 EMA will slowly start catching up to the price action. And that's why sometimes markets go into a chop zone and they sort of just go sideways for a long time. And that's usually because they got too far extended on a macro level chart, like a weekly or a monthly chart, and the price action is trying to cool off while the moving averages are catching up. That's called a correction through time instead of a price action correction where the price drops lower. It's just correcting through time and the price is staying the same price while time is passing, which allows these moving averages to catch up. So you can see on the weekly and monthly chart for the NDX that we're still in bull markets, And in order to get out of a bull market, we would need to close below that $12,800 level. All right, next up, let's jump over to the S&P 500 SPX index. And we saw the S&P 500 closing over top of the 5 EMA. And remember, this is a weekly chart. All of the moving averages are definitely still stacked to the bull side, and they're all nicely positive sloping and trending. Now, the 2021 price target I have for the SPX is up here at 40.40. And from this week's close up to that price target, we have about a little more than 3% upside. From this week's close down to support around the 20 simple moving average, we have just about 3.8% downside. So just like with the Nasdaq 100, we're almost halfway between the price target and the downside support. And with the bullish trend and the bullish price action, we want to favor the price still heading higher towards that price target until we get out of the bull trend. So that's the way my price targets work. If we're trending higher, we have upside price targets that we want to pay attention to. And if we get into a bear trend and we're trending lower, I'll have downside price targets that we want to pay attention to. So right now, the 20 simple moving average is right around 37.60. And that level is just a support level. If we do start seeing selling, we would want to see bulls stepping in at that support level and start buying up the dip. And that would help drive the prices higher yet again. Now on the S&P 500 down to the 50 EMA on this weekly chart, we have about a 10% drop. So if things do start getting bad and we close below the 20 simple, we would be looking for another about 7% drop to get down to the 50 EMA. But right now we can still see the trend is bullish and the price action is still bullish. So we still want to favor the bull scenarios until we see the price action start breaking down. On a monthly chart of the SPX, you can see we're in a very strong bull trend as well, with the price action trading well above the 5 EMA. And all these moving averages are still strongly stacked to the bull side. You can see we've tested the 50 EMA back here in the crash of March, and we've been bouncing and heading higher ever since. So it wouldn't be surprising to see the market cool off once we get up to this price target at 40.40. Yes, we can break above that price target, but at that level, it would be a good time to take a lot of profits and get more defensive on this market, because it's possible we could come all the way back down to these 20 simple moving averages and test them as support before we go any higher. So remember, we're bullish while the trend and the price action are bullish, and we're looking towards our upside price targets to get defensive once we hit these levels. So right now we still have a little more juice to go in the S&P 500 until we break to that level, and that's where we'll want to get more defensive. Next up is the Dow Jones weekly chart, and we saw the Dow Jones also closing above the 5 EMA, and all of these moving averages are still strongly trending to the bull side. So far the Nasdaq, the S&P 500, and the Dow are all still in bull trends, and they all have bullish price action. The Nasdaq 100 is by far still looking the weakest, because as you can tell from the other price action, they're above the 5 EMA, and the Nasdaq 100 has broken down to the 20 simple moving average. Now on the Dow Jones monthly chart, you can see we're getting a little too far extended, starting to peak above the upper Bollinger Band. But remember, this month is not yet over, and it's still possible that we close the month inside the Bollinger Band. Remember, next month too, these Bollinger Bands will continue to expand, which will allow the price action to continue to go higher. But you can easily tell from the Dow that it's in a very strong bull trend even on this monthly chart. It's trading well above the 5 EMA, and all of these moving averages on the Dow Jones are still very strongly stacked to the bull side. Next up is the Russell 2000 weekly chart, and we see the Russell cooling off a little bit last week, but still holding up above the 5 EMA with all of the moving averages stacked to the bull side. Now the interesting part about the Russell, if I zoom out here, is there is this very nice trend line that has been calling the top, going all the way back to 2011 and the highs of 2014 and 2018. We did break above that trend line, which means that level is no longer resistance, but could now act as support. So if I zoom in here from the close last week, if we do start seeing the Russell continue to cool off, we do have about a 9.5 to 10% pullback before we get to that support level. You can also see that it's very strongly correlated to the 20 simple moving average on the weekly chart. Well, if I switch the Russell 2000 over to a monthly chart, you can see the Russell 2000 is getting very far extended. The Russell 2000 is well above its upper Bollinger Band, and you can see that it has been trading above the upper Bollinger Band for many months now. So it's not necessarily an indication that it has to go through a correction. So look at these last 4 months, and you can see they were also trading above the upper Bollinger Band, but that did not trigger a correction because they just continued to go higher the next month. Now the difference here is we're getting way above the 50 EMA on this monthly chart, and we're over 30% above it. Now the difference here is that this is definitely looking like a parabolic, unsustainable run in the Russell 2000. You could see that the 50 EMA is all the way down here, which would take about over 30% drop to come back down to that level. That doesn't mean we have to come all the way down to the 50 EMA. Like I said earlier, we could find support at this trend line, but that's still over a 10% drop before we get to that level. So on the Russell 2000, I would be a lot more defensive because it's possible we see some selling in the Russell and possibly even selling in the Russell as money rotates back into the tech sector. The Nasdaq 100 could be a better buying opportunity right now, but that's subject to change if the price action breaks below support. All right, and then next up, we'll take a look at the Bitcoin weekly chart, and we see Bitcoin has a ton of resistance above, and these are all price targets that Bitcoin has that could trigger a correction. We're currently struggling right around that $59,000 level, and we're still holding up in a bull trend. The price action's still over the 5 EMA on the weekly chart, and all of these moving averages are still strongly trending to the bull side. So this isn't like we have to go through a correction just because we're struggling at these levels, but this is something you want to pay strong attention to because my price target on Bitcoin is up here at 62,500, and from last week's close to that price target, that's about 9% upside. Now, if we got through a correction and we came back to the 20 simple, that's about a 40% pullback. So if you've traded Bitcoin or you've seen the crypto space long enough, you know that 40% pullbacks are completely normal in the crypto market, and that would be a correction to be completely expected. A 40% pullback would allow Bitcoin to go a lot higher after the correction was over, but it would be a very painful correction if you're chasing Bitcoin at these levels, and then you have to go through a 40% drawdown. So as I always say on my daily analysis, if you're not already in Bitcoin, I don't suggest buying at these levels because it's possible that any of these price targets above could trigger a 40% pullback. Now on the Bitcoin monthly chart, you can see this a lot better of exactly why I'm so concerned about Bitcoin. If you're looking at the monthly chart, it basically looks like Bitcoin has gone parabolic and we're way above the upper Bollinger Band. You could see last month when we were way above the upper Bollinger Band, we tagged that $59,000 price target and had a huge sell-off. This month, we started going all the way back up and we got very close to that price target at 62,000 and we're starting another sell-off. So the question is, did Bitcoin go way too far, way too fast, and it needs a major correction and cool-off period before it can go higher? If you're looking at the monthly chart, it's definitely saying be defensive on Bitcoin and that there's not a lot of upside left. There's always going to be people out there that try to justify Bitcoin's corrections and moves, but at the end of the day, this is 100% technical analysis. Bitcoin is way too far extended and there's almost no upside room left to make this worth investing in or worth trying to trade to the upside. There's a lot of downside potential on something that goes this parabolic on a monthly chart, so just be aware of that and be prepared for a possible huge sell-off, which like I showed you could be that 40% pullback. On a monthly chart, if we went from today's price down to the 13 EMA, that's about a 55% pullback. So we're looking at anywhere between about a 40 and 50% possible pullback at these current Bitcoin levels. Down to the 5 EMA on this monthly chart is about a 30% pullback in Bitcoin. So let's just do a quick summary of all of the indices and then we'll wrap up here. We see the Nasdaq 100 is by far looking the weakest, but it's still maintaining a bull trend and holding up above that 20 simple. We're looking for a bull break above 13,500 or a bear break down below 12,800. On the SPX, we're getting very close to my price target at 40.40, and we're still holding up in a very strong bull trend with bullish price action. So the SPX does look like it should get to the price target before we see any more corrections. But remember, anything is possible, and if we start breaking down below about 3,900, that would be a sign that the SPX could be going back into another correction. On the Dow Jones, we're looking bullish as well, but don't forget it's getting very far extended on that monthly chart. The trend is still bullish and we still have the bullish price action, so we'd be looking for a break below about 32,260 to possibly start seeing a correction in the Dow Jones. On the Russell 2000, we're also very far extended on the monthly chart, so we're looking to see if the Russell can break down below about 2265 to possibly trigger a correction in the Russell, which would take us all the way down to about 2056, which is about a 9% drop from these current levels. And then finally on Bitcoin, we're getting very close to my price target at 62,500, and we're very far extended and possibly due for a 30 to 50% pullback. Don't forget though, we would have to break below these support levels, and the strongest support we need to break below to start looking at the bearish correction in Bitcoin is down below about 53,100. So don't forget we have a lot of bulls in this market and we're getting very close to 50% bulls as we're getting very close to my price targets and we're getting very far extended on weekly and monthly charts. This isn't a sign to go get bearish and the sky is falling. It's simply a warning sign to be defensive and don't be overly greedy at these levels. Remember that the price action is king and we want to be on the side of the trend. So we're not getting bearish until we see the price action and the trends start breaking down. And that's why my daily analysis is going to be so critical, because we're going to see these breakdowns at the daily chart level before we see it on the weekly and the monthly chart level. By the time you see it on the weekly chart or the monthly chart, the move has generally already happened and you're already going to lose a lot of money. So if you are new to my channel, I do daily analysis on all of these indices to help you stay on the right side of the trade. And I also have a Discord server where I do hourly updates to help you stay on the right side of the trade day to day. If you're interested in my analysis, go ahead and subscribe to the channel and smash that notification bell so that you don't miss any of my updates. And if you want to join the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So remember to be defensive at these levels. It's okay to still be a bull and still take long trades, but just be flexible and be ready to switch to a bear at any given moment. We're at very critical levels in the market and we could see a shift in either direction at any given point. Even if this market wants to go higher, there will be a point where we've gone too far and we need to go through a correction. All bull markets have corrections. They're completely normal. They're completely expected, and they're very healthy because they allow the market to go higher after they go through a correction. So I hope you all enjoyed this special weekend update. I'm looking forward to a great trading week ahead. And as always, I will see you in the next episode.